Hey, good morning, Alex. This is Matthew over at Big and Bright Inflatables. Thank you so much for joining us today. Can you introduce yourself real fast and tell everybody what you do and why you are an expert on the party rental insurance scene?
Sure. Yeah. Thanks for having me. My name is Alex Cossio. I'm an area vice president of risk placement services. So basically, I'm a wholesale insurance broker. Been around the industry pretty much my entire life, both on the carrier side, which means the insurance company, as well as a retail agent. So a little bit different role now. Now, essentially, my customers are those retail agents that you would work with. So, like I said, I was doing this my entire life. Basically as soon as I was able to walk or able to help with the family business, that's what we've been doing. So many of you guys probably know my dad, Larry. He was also one of those pioneers trying to bring affordable insurance to the industry as well as just providing education. So, like I said, just anything we can do to help. That's typically what we've been able to do over the last 20 so years. Just now, just in a different role.
Hey, let's start with the big one. General liability insurance is the first insurance that people think about in the party rental industry. What exactly does general liability insurance cover in the for a party rental company, and why is it considered essential for our business?
Sure. So I'd say the two main things that general liability policy are covered most of the time, as far as the triggers go, it's bodily injury and property damage. In order for somebody to collect under those policies, they do have to prove that you were negligent. So that usually means filing a lawsuit, getting an attorney involved. I would say that it's important to have it in the industry, just because if you were to say go to a park or to a school district, you're inevitably going to be asked to provide proof of coverage, but then also to name the venue or the school district, for example, as an additional insured on your policy. And that doesn't mean that you're covering them for any and all things. All that means is that if you were to, let's just say you set it up negligently, you didn't put stakes in the ground, or for whatever reason that setup was deemed improper. All that means is that if, let's just say, the school or the park district, they get named in that lawsuit with you, your policy is going to pay to defend them. But say that they failed to provide a safe premises for the party to happen. That's not something that your policy is going to cover. That's something that their insurance is going to pick up. So it's really just your negligence. If it drags somebody else into that lawsuit with you, that's what additional insurance status means. Sometimes they may also require you to give them that certificate, but also the endorsement, the actual endorsement that adds them onto the policy. So an endorsement, all that means is a change to the policy. A certificate of insurance, it's great. You can have those issued, but unless you have that actual endorsement, which is usually like a CG 2011 or 2026, it has a funny name to it. But if you're in a state like California, they need to have a CG 2026 for like every single city that you go to. So it can be kind of tedious, but that's the correct way to do it. But of course, you have to have insurance in order for you to provide that form for them.
I'm glad that you mentioned that often a city or a church or something will have you add them onto a policy, because I think the first time that comes up with anybody, they freak out, like, what are they talking about? But it's very, very common. I've seen it done hundreds of times. It's very common, right? And it typically doesn't cost anything for that to take place, correct?
For the most part, the only time that there may be an additional charge is if, let's just say, they don't accept a blanket form that's in the policy. All that means is like, hey, this form is in the policy, but if you need to be specifically added to it, like your entity name or this city needs to be added to it, they may also ask for a specific endorsement. So they may want to see what's called a waiver of subrogation or a primary non-contributory endorsement. Those ones potentially could have an additional cost to them because it's not to your or to the insurance company's benefit. So a waiver of subrogation, meaning that, like, hey, if something happens, we're not going to be able to subrogate against your policy, even though it may have been your fault. So the best example of that is like car insurance, right? So say you're sitting at a stoplight, somebody rear ends you. Your insurance, even though you didn't cause the accident, your insurance policy will pay for that damage to your vehicle, but then they're going to subrogate against the person who was actually liable in the incident. So by providing a waiver of subrogation, that's saying that you're not going to be able to do that. And so obviously it's not to your insurance company's benefit to do that. That's why there may be an additional premium charge for it.
Okay, that makes sense. All right, so what I understood is for bodily injury to take effect under the general liability insurance policy, even though it's covered, it typically you have to be negligent, and they initially kick that off through the process of a lawsuit, correct?
Correct. Yeah. So you'll see letter of representation from an attorney demanding to see copy of the policies. At that point, that's when you're going to be turning everything into your insurance agent. Sometimes they may even go around you and your insurance agent and notify your insurance company directly. I've seen that happen as well. And so at that point, that's when you start to see a general liability claim that's opened up, and it will show up on your loss history as an open claim. The downside about these types of general liability claims is they take a long time to get through the process. So you may be in that situation for a year or two where you have what's called an open loss on your loss history. And that can be very detrimental for you moving forward, trying to get coverage at an affordable rate. So unfortunately, that is the process. So that's what we talk a lot about, an accident policy to help fill the void, because a general liability policy, they have the ability to offer what's called a medical expense payment, or med pay is what we call it in the industry. Usually it was a very small limit, maybe $5,000 or $10,000. But if, let's say, you were to slip and fall in a grocery store, so you slipped on a puddle of water in the grocery store, they would more than likely have that $5,000 or $10,000 where they say, hey, look, here's some money to go away, take care of your medical bills. But in the inflatables industry, as you can imagine, that would probably be death by 1,000 cuts. So that's why it's excluded. And that's why we're such a strong proponent of having what's called accident coverage to fill that void if there is some sort of a broken arm, fractured ankle, something where it's a minor injury, but they still need to go to the doctor. That's something that, through no fault of their own. It wasn't the rental company's fault that somebody was drunk and, they slide down the slide and they take out somebody at the bottom of it. That wasn't any negligence on behalf of the operator, but today's world, everybody's looking for somebody else to pay for these type of bills. And, here we are sitting at the end of April. There may be a lot of people that haven't met their insurance deductibles. And, you're talking about a substantial out-of-pocket cost. People start seeing these billboards, saying, hey, have you been injured on a bounce house? There's Morgan and Morgans out there that are actively looking to seek out this type of litigation. There's private equity firms that are financing large lawsuits, because they know that there's potentially $1 million+ at stake. So they're willing to see this as an investment opportunity to pay for, the initial cost of defense, but they're going to keep 60 to 70% of whatever the settlement is. So ideally, in the perfect world, you want to avoid as many of those bodily injury claims as possible by simply being proactive with your claims process. So asking the people, hey, was there an injury? How'd the event go? And if they say that there was an injury, or, hey, little Johnny had to go to the ER because he, got a tooth knocked out, those are the things that you can absolutely get out and be proactive as a business owner. Don't hide behind the waiver and say, hey, well, this wasn't our fault. It's pretty much implied that if somebody was to get injured on your equipment, they're going to be looking for you to do something as the business owner, because, in their minds, you guys are all millionaires. So you want to make sure that you're trying to protect that policy as much as possible, because the impact moving forward, if you have a general liability claim, I know everybody gripes about the minimum premiums being $4,000 to $5,000, but if you have an open claim on your loss history, I would expect you to pay at a minimum $25,000 or more moving forward, and that's just the baseline. It could potentially get a lot uglier than that, especially if you're a larger operator.
Okay, let me see if I can just summarize kind of where we're at on this point, because that was a lot and it might be a little hard to digest. So basically what I understand is the general liability coverage is kind of your umbrella major coverage. It covers property damage and it covers bodily injury. But to kick it off, typically a lawsuit has to be filed, because basic medical things like a broken hand, leg, tooth knocked out, those are not going to be covered directly. So most general liability policies have you carry a second policy called a participant accident insurance policy that might be ranged between $5,000 and $25,000. And that would be the policy that would kick in for basic minor medical issues. So somebody breaks a leg, they have to go to the emergency room, they expect you to pay. You would file against your participant accident insurance. It would pay out, and that would protect the bigger, the more expensive policy, the general liability policy, from ever having to, work through a lawsuit and have an open loss and ongoing increases to your premium. Did that pretty much summarize it?
Yeah, that's great. Great way to summarize it. You want to be using your accident policy as that sacrificial lamb. You throw that thing to the wolves. You want to file as many accident claims as you want to throughout the year because let's say an accident policy, the minimum premium is $350 a year. Even if you have claims on it and they double or triple your premium, that's still not that big of a deal in the grand scheme of things. But if you go from paying 5,000 to 25,000 on your general liability, and that's for the next 4 to 5 years, that definitely hurts the bottom line. So use the accident policy. There are actually several carriers out there on the general liability side that do not require it. So a lot of people go with the lowest possible cost. Maybe your agent isn't suggesting that you take the coverage because it's an additional cost. As a business owner, I see that as being very short-sighted. You want to make sure that you are provided with some sort of an option to give these people a way to de-escalate a situation. Because if you have a pissed off mom and you're saying, "Hey, look, you signed a waiver," more than likely she's going to feel backed into a corner, and then that's when the lawyers get involved. So use the accident policy. The main limit, I would say, starts at $25,000, but it's excess coverage, meaning that your or the claimant's primary health insurance is going to be used first. And then that's when the accident policy kicks in for like the out of pocket costs. So let's just say, just in general, it's a $10,000 deductible. Maybe they haven't been to the doctor yet this year, so that accident policy would pay for that $10,000 deductible. But then also, if the out of pocket would be another 20%, maybe their primary coverage covers 80%. So you would be picking up just the portion that their primary coverage does not pick up, as well as any of the follow-up visits. If you have to go to rehab, it's all tied to that same claim. And usually, like I said, probably $25,000 or so. And that's usually enough. You have the ability potentially to get higher limits on the accident side, say $50,000. I've seen that a lot for more of your sports camps and things like that. But it's the exact same policy that you have if your kids play interscholastic sports, or they have coverage if they break their arm on the playground. It's the exact same policy. Works the exact same way. The payouts to get the claims processed, maybe a month or so. It's a very quick process. So that way, again, you get those angry moms and dads off your back because you're taking care of it quickly. But if you stonewall them and you try to hide behind the waiver, again, that's when you're more than likely going to start seeing those lawyers get involved.
Okay, I'm very excited to understand that because when I was in the party rental industry, I didn't fully understand that. There was a couple little small things that I just took care of out of pocket. I very well might have had a participant accident insurance that I didn't know about. And if you're telling me, you're looking at $350 to $500 a year or something like that, in my mind, that's like one rental to give me the protection in case something big came up. And like you said, even if I'm using it a couple times a year and now it doubles it to next year, this still seems like a pretty good value to protect your general liability. So I'm very glad to understand that. So I want to go a little bit further into the participant accident insurance policy, and I want to say something that we discussed before I want you to talk about, which is you can have this include volunteers. So in the smaller businesses, often you're going to have friends or family like help you set something up. If one of them were to get hurt during this volunteering process, or while they're, say, monitoring a unit at an event, tell us how this participant accident insurance covers that.
So it's the same premise, and I guess the coverage itself. There's really only two carriers that I know of that do offer this. So it would be Berkeley Accident and Health, as well as the AIG product that we have through our program. But it's just an optional benefit that you can select when you're binding the coverage. And the intent is to cover those people that are not covered under a workers' comp policy. So, figure your employees, those people, if they get injured on the job and you have a workers' comp policy, it's a work-related injury, it's always going to go under workers' comp. But to your point, let's say you're a small business owner, like you don't even have any quote unquote W-2 employees. Maybe it's your wife or your kids that are helping you. Those are, like you said, it's a volunteer. So as long as you have that benefit, which could only be maybe another $100, $250 a year, to include a separate class, which would be those 1099s, or to say it's a volunteer, somebody who's not a true employee. They get the same benefits as the participant. So if somebody was to break their arm inside of a bounce house. It's the same thing if, maybe one of your volunteers is stepping out of the bounce house to help you set it up and they trip and fall and break their arms. It's the exact same premise. Their primary health insurance would be used first, and then your policy would kick in to cover any of the excess. And I forgot to mention this earlier, but the excess means just again, like their primary insurance is used first. But let's say you live in, California or Florida, Louisiana, New York, even. There's a high percentage of people in those states that do not have primary health insurance. And in that case, that's when your excess accident policy essentially drops down to become that primary coverage for them up to that same $25,000 limit. So again, just it provides value in those places where, again, we know that a lot of people don't have primary health insurance. And if you don't have health insurance and you get stuck with a $10,000, $25,000 bill, you're going to start looking around for other options to see what you could do to get that money back. So, a lot of value there, and definitely to cover those people that are helping you out. Spouses especially, I imagine they'd be pretty upset with you if you knew you had access to that benefit and you did not purchase it.
Okay, just to clarify, you did say it, I just didn't catch it. Does this cover 1099 employee subcontractors as well? You can get on to me about that. 1099 employees do not exist. There's only 1099 subcontractors.
Yes, 1099 subcontractors, because they're not employees, they're not covered by your workers' compensation. So that would be another one of those gap fillers to make sure that, hey, if you do in fact have a 1099, this policy could potentially cover them as well. So as a business owner, as somebody, you could see them as like a partnership in this ordeal. I would, me personally, I would feel better working for somebody that had that coverage on me as a 1099, just in case, God forbid, something did happen.
Okay, so if you are a 1099 subcontractor, you are supposed to carry all your own insurances, including your own health insurance. So if something were to happen to you, you should go to your health insurance first. But if that 1099 employee happened to not have their own health insurance, that's when this policy could kick in.
Exactly.
Okay, awesome. Let's shift a little bit away from the general liability policy and the participant accident insurance policy. Those are kind of the primary. Let's talk about equipment coverage. So speak to me a little bit about inland marine. What does it protect? How does it work with all of your equipment?
Sure. Yeah, so it has a weird name. It is not necessarily about boats and things on water, but in essence, it is a property policy for equipment that is mobile. So a property policy, everybody for the most part understands it's to cover your things. It's a first party type of coverage. But the issue with the property policy is that it typically only covers that equipment while it's in the storage location. There may be an endorsement in there somewhere saying, hey, if it's 100 feet from the building or 1,000 feet from the building, we'll cover it. But obviously, for what we're doing here in the party and rental industry, it's going to be much further away than that. So, in the marine coverage covers it not only while it's in the storage building, but also while it's in transit or while it's set up at the event. So, typical things, I would say most people look at it from the standpoint of, hey, if I had a bounce house and it was set up at an event and somebody came and stole it, would that be covered by inland marine? And I would say yes, that is something that's covered. Keep in mind that you're going to have a deductible that has to be paid, but in my opinion, in my professional opinion, you should not be using your inland marine policy in that way, unless you're a very small operator and that piece of equipment is really that valuable. I would look at it from a standpoint of having inland marine coverage as a catastrophic loss. Like, what if you had everything in your storage building and everything burned down and you lost it? That's something that I would obviously file an inland marine claim on. But if you're just doing it for like a one piece of equipment, it may not make that much sense. And then moving forward, because inland marine is so inexpensive, if you don't have any claims, once you do have that claim, that same carrier may say, hey, look, we're not going to cover you because you had a $2,000 loss. So we're going to non-renew you. And then your insurance does increase moving forward if you're not in a program. So use it as a silver bullet. I wouldn't use it as like a, hey, if something gets damaged or if somebody stole it, now all of a sudden I'm looking to use the inland marine coverage. Just be very thoughtful about that. If it's something that you can pay out of pocket to replace or to repair it, I would go that route versus filing an inland marine claim. But again, just think about it from a catastrophic standpoint. And something else to add in there is make sure that you guys are including some of those miscellaneous items. Maybe you have thousands of dollars of extension cords, stakes, those things that are the ancillary things that you need to do your setups. If your storage building burns down, you lose all that thing. I mean, you're going to have to replace all that stuff as well. So just be mindful of that. Those are the things that people forget to put on their inventory list. Another thing to keep in mind is that these policies typically have provisions in them for how they're going to pay for a loss. So usually I would say the new standard in the industry is if it's 5 years or newer, they're going to give you replacement cost value, which is arguably it's the best one. If it's older than 5 years, they're going to give you actual cash value, meaning that they're going to factor in depreciation into what they're going to pay you as far as the claim is concerned. So if you have newer equipment, just keep in mind they're going to give you replacement costs. But if you have a lot of older equipment, keep in mind that you're not going to be able to get the same coverage for those older items as maybe you could in the past. So in the marine coverage, it can cover the trailer itself, but you guys also have the ability, let's just say you have a commercial auto policy, you can cover your trailers for the actual theft or damage to the trailer itself. You can also cover that on a commercial auto policy. In my opinion, that is a better way of doing it, just because a lot of times the premiums, or maybe even the carriers, say for example Hudson, they don't want to cover trailers. They want to cover the contents of the trailers, but not the trailer itself. So just keep in mind you do have that option if let's say that the carrier that's quoting you does not want to cover the trailer. Just look into your commercial auto policy.
Let's switch over to workman's comp insurance for a little while. So you're going to need to carry a workman's comp policy anytime you have a W-2 employee. So can you explain how workman's comp works? And then I know we've already touched on this, but talk again about how it does not cover 1099 subcontractors. And I believe it also does not cover ownership, correct?
It can cover ownership. So sometimes, I mean, I'd say it's less likely that you as an owner are going to file a claim against yourself under workers' comp. So a lot of people will exclude themselves from coverage because it helps them to lower the payroll amount. So, general liability is based on sales, workers' comp is based on payroll, and it's based on the class codes of what their activities are. So let's say you have one employee, but they do clerical work where they're doing invoices and things like that. They're also cleaning the equipment, but then also they're delivering the equipment. As you can imagine, doing the clerical thing is just the paperwork behind the scenes, not that big of a deal, not very risky at all. They get a very, very low rate for that. However, if you have that same person doing all three of those things, the workers' comp carrier is going to charge you the highest exposure on that same person. So even though they may do 90% of their work in the office, they do 10% of the work setting up the equipment, 100% of that payroll is going to go into the setup code, which is a much, much higher rate. So, as a small business owner, you got to keep that in mind. Try to divvy up those tasks as much as you can. But the idea being that, hey, if you have somebody that's sitting in an office, they should not be getting charged the same as somebody who's on the road all the time setting up the equipment. But as far as like what workers' comp is intended to cover, it's any injuries that are related to the job, but then also lost wages. So that's one of the big components of workers' comp coverage. Obviously, if you're down for the count, you can't work. You have to have some sort of some income coming in. So, the other thing to keep in mind, if let's just say you live in a state or you live on the border of two states, you need to make sure that you have the workers' comp coverage in both states. So you need to make sure that you're letting your agent know, hey, I might live in Delaware, but I'm going into Pennsylvania, or I may have an odd job in Connecticut. If you don't endorse those states onto your workers' comp policy and the injury happens in those states, you could potentially be uncovered. So little nuances. Make sure you guys, if you live in those areas, or if you live kind of on the border of two states, just make sure that you're letting your agent know that that's part of the exposure.
Okay, and follow up on the part B of that, which was it does not cover 1099 subcontractors.
Yes. 1099, again, yeah, they should have their own insurance as an operator. So in theory, again, we talked about this before, there is no such thing as a 1099 employee. So those subcontractors, ideally you have some sort of benefit covering them under that accident policy. The nuance there is that there's no lost wages paid under the accident policy. It's just strictly reimbursement for medical bills. So it's nowhere near as robust as workers' comp. It's never intended to be that. But if you have true W-2 employees and you carry workers' compensation, that's the policy that's intended to cover them. However, there are a lot of states that don't require you to have workers' comp. Even if you do have W-2 employees, they may not even require you to carry workers' comp because there's a threshold on payroll. So if it was, you have $50,000 or less in payroll, they may say, hey, you don't need to have workers' compensation. But you may be going to set up at a school or a public event, and they have on their insurance requirements, hey, you have to have general liability. You have to name us as an additional insured. You have to have $1 million worth of auto insurance, and then you also need to have $1 million on your workers' comp policy. So sometimes the jobs that you're actually going to work may require it, and that may force your hand to actually buy the policy. Again, if let's say you do not have employees, or it's just you and your wife really as the owners, the workers' comp policy may be very inexpensive for you. It may just be like a minimum premium, I don't know, $1,200, $1,500, just so you can meet that requirement. But just keep in mind that may be something that a school district or like a park district may require you to have just to even have an event there.
So I've always found it to be not very expensive because it's a percentage of payroll, and it's typically not a crazy percentage of payroll. And even in the party rental industry, I didn't find it that high. Just on average, I know you can't. Are we talking like 3%, 5% of payroll on party rentals?
Well, yeah, it's hard to put a number on it because, again, like I said, like it's based on the class codes of the payroll. So you may have, a very high payroll number, but again, if they're mostly just doing clerical work, that rate may be, $2 versus somebody who's doing the setups and the takedowns, and they maybe have like a $15 rate. So in an ideal world, if you can divvy up those tasks where you have one person solely doing clerical, one person maybe solely doing the cleanups and kind of working in the warehouse, and then another person that only does the setups and takedowns on the event, it's one way to help segment your insurance so that way you're not paying for the highest class code if somebody is really only doing a little bit of the deliveries, but mostly of the clerical work.
Okay, great. Let's move on to commercial vehicles. So let's just talk about your auto policy. What in the party rental industry do we need to know about commercial auto?
So if you own any business vehicles, so, a lot of people start out in the industry, they're, sole proprietor, they're using their own personal vehicle to make these deliveries and usually they don't even let their insurance agent know that that's what they're doing. So first things first, make sure that you guys are talking to your insurance agent about the vehicles that you plan to use for the business. So if you're a sole proprietor, you're using your personal vehicle, a lot of people can potentially get a commercial auto policy in their personal name. But if, let's say, you have an LLC, right? You started an LLC for the business, but that LLC does not own the vehicle that you're using. You potentially have a gap in coverage there. So you have to figure out how you're going to structure your business. Are you going to put the vehicles in the business name, or are you going to be using them, your personal vehicles, where you need to have something that's called hired non-owned auto coverage? So what I would recommend is if let's just say, for example, you have these vehicles in the business name. The standard that you want to have is usually $1 million. It's $1 million with a CSL. That means combined single limit. So I would recommend that as just kind of like your baseline to have your coverage on. It's really going to depend on the vehicle itself. So that's really going to impact the cost. So another thing too, you want to make sure is on your commercial auto policy is your trailers. So anything that's connected to the vehicle pulling it, you want to make sure that those are also listed on the commercial auto policy, because that could potentially be a very expensive gap in coverage if you back your trailer into something and it's not covered. So just keep that in mind. For the most part, there's carriers out there like Progressive. I'm trying to say, I think Kemper is another carrier that was out there. It's not a great marketplace. I'll be the first to tell you that. Auto coverage in general, not even just for the party equipment rental industry, but in general, a lot of these auto owners or auto insurance companies are getting just absolutely killed, especially if it's a business policy, because again, you have a very litigious society nowadays. They see that there's a business logo on the side of the vehicle, so now they want to sue you for everything that you're worth. My neck hurts, my back hurts, kind of deal. So keeping in mind that you want to make sure that you have a commercial auto policy, because by definition, what you guys are doing is a commercial risk. So I have a lot of people that ask, oh, well, like I have a business auto endorsement on my insurance. But there is a distinct difference between business auto use and commercial auto use. Business auto could mean things like going to the bank, going to the post office, doing just like an errand on behalf of the business. But as soon as you start delivering And doing deliveries and pickups, that's a commercial exposure. That's why you have to have a commercial auto policy. And a little nuance, little insurance nerd tip for you. So loading and unloading, for example, that is not covered under your general liability policy. That's a commercial auto claim. So if you don't have a commercial auto policy and you somehow damage somebody's vehicle while you have it on the dolly, you're pulling it past the vehicle in the driveway and you scratch it, that's something that would be covered under a commercial auto policy, not your general liability.
I did not know that. Okay, let me see if I can summarize that real quick. So you're starting out in business and you just have a personal pickup truck. You wouldn't, if the business is in your name, meaning it's not an LLC, like Matthew Billington is running a business, then I can go ahead and get a commercial policy because me, Matthew Billington, owns the business and the auto. But if I've created Matthew Billington LLC and LLC is going to be renting, then the LLC is its own entity and does not own the auto. Therefore, I cannot get a commercial policy. But on my personal auto, I can get a hired and non-owned auto insurance policy, or the LLC can get a hired and non-owned auto insurance policy that would cover that because it doesn't own it. Correct?
Correct. The second one, yes. So the business, the LLC, is going to buy the hired non-owned auto coverage, and that's intended to cover, again, the vehicles that are not owned by the LLC. So if it's your personal vehicle, or let's say you had to rent a box truck because you had a large event, that's a non-owned vehicle. I guess technically it's for rent. So that's one of those things that you want to make sure that you have, even when you're going to rent that vehicle. They may even offer that coverage to you. But if you have a hired non-owned auto policy already, you don't need to buy that portion of the coverage. The one thing that hired non-owned auto does not cover is the actual physical damage to the vehicle itself. So if you have, you're going to Enterprise to go rent a box truck, I would at least pick up the physical damage portion of it. But if you have the hired non-owned auto, obviously you don't need to buy that again. But it's intended to cover like your personal vehicles. And again, like those rented vehicles, that's probably the main two things that you would see the need for that coverage. Hired non-owned auto, typically in order for you to get that coverage in place on the vehicle, they're going to require that your personal auto limits are of a certain level. So usually it's like 100,000, 300,000 is the minimum requirements. Because in essence, the hired non-owned auto is kind of like an excess liability policy sitting over that. But again, it just covers the liability portion, does not cover the physical damage to the vehicle itself. But again, very important coverage to have. Most people don't have it. Don't think to ask about those things, but very, very important.
Does hired and non-owned auto insurance cover the 1099 employees using their own trucks?
Yes. Yes.
Okay.
Yes.
So that's good to know. All right, one last final question. For somebody starting out in the business, let's say they're just starting out, they got 4 or 5 units. What are their must-have policies day one? And then kind of explain what they should add over time.
Okay. So day one, we already talked about it, the general liability and the participant accident coverage. Those are I would say, just like your core meal to get started. As far as the other appetizers and things you can add on to it, we talked about hired non-owned auto coverage if you do not own it in the business name, commercial auto policies if you do own the business or the vehicles in the business name, workers' comp once you do get to the point where you have employees. But there's other policies out there like cyber liability, which I would recommend even on a day one, just because it's, especially if you're processing credit cards or if you're storing any type of personal information. Everything's digital these world, and anything that's on a server can be potentially breached. And if, let's just say that you did have a breach, everybody whose information was compromised, you not only have to notify them, but you also have to provide them with 12 months of credit reporting, or credit monitoring. So that could potentially be very expensive if you have thousands potentially of customers. So I want to keep that in mind. Even if you have rental software, you have Inflatable Office or ERS or Bouncy Castle Network, those types of software companies, they have their own cyber coverage, but you still need to have your own just in case there's something that their policy doesn't pick up. You're still going to be named in any type of a lawsuit. So in my mind, having that peace of mind is always good to have, especially as a business owner. So that's cyber liability. Another thing that I would recommend, especially if you staff your equipment, is something called abuse and molestation or sexual abuse and molestation coverage. Because all it takes is to be accused. Especially if you have employees out there. I would recommend one that you always have background checks on your employees before you hire them. But especially if you're going to be staffing these events, because there's a lot of creepers out there. You may not know what they're up to or what they do after hours. I can recall one business owner that was down in Florida, had a very successful business, setting up hippo slides on the beach. It was only open for 3-4 months out of the year. I was making 300-400 grand in those 3 months. I mean, he was doing very well. But one of his employees actually was somebody who was, offering free rides to like a 12-year-old if she would send them pictures. And it was very inappropriate. Obviously, it came to light, got sued for it and lost his business because he did not have sexual abuse and molestation coverage. It's something that's excluded under your general liability policy. So something to definitely consider, especially if you do these larger events or you do provide staff, because all it takes is an accusation. And like I said, it's not covered under your general liability policy. Another thing to consider would be EPLI coverage or employment practices liability coverage. So again, once you start getting those employees on board, so that's a policy that can protect you if you get sued for discrimination. Maybe somebody felt that you didn't promote them. And also, even if you didn't hire somebody, they may say that, oh, you discriminated against me, so I'm going to sue you for that. It's another one of those nuances of insurance that's not covered under your general liability policy. It's actually specifically excluded. So really, if you wanted a short list of the things that you might want to consider, go and look at your general liability policy on the things that are excluded, and it'll tell you pretty much those things. So auto coverage, workers' comp, the cyber coverage even. There's a lot of things on there that you may want to consider adding. Another thing too, I'm actually kind of surprised a lot of people who don't buy this coverage, is pollution coverage. So if you guys are using chemicals, you're cleaning them in your driveway or you're cleaning them while they're set up at an event. If somebody says that your chemicals polluted the runoff water or the drain water, whatever it is, they sue you for that. That's not covered under your general liability coverage. So you want to make sure that you kind of tighten up some of those loopholes that may be in the policy. So if you just have time, it's the off season, the Facebook groups aren't popping like they normally do in the off season, go read your insurance policy. You might find some things that you might want to tighten up. But I would say that those things, definitely easy things that you can pick up. Another thing I would say is a nice add-on would be travel accident coverage. So a lot of people, as these business owners, you guys are traveling a lot. You may be going to conferences, you may be going, like IAPA, for example. If there was potentially an issue where you and your employees get injured while you're on that trip, it doesn't have to be international travel. It could be domestic travel, completely, totally within the bounds of having an accident policy in place. It's a great way, I would say it's an inexpensive way to provide somewhat of a benefit to your employees because you're giving them AD&D coverage or accidental death and dismemberment. So it's kind of important, again, if you're trying to attract or retain talent to provide those types of benefits. And as a small business owner, that's something that's, I don't know, $1,000, $1,500 a year. I can cover you as an owner. And the good thing about them too is they're very customizable. You can, as an owner, you can have 24/7 coverage. Maybe you guys want to do an international trip to Mexico or to Canada or something. As an owner, that policy technically would cover that exposure as well. So if you're in Mexico and you get some food poisoning, you got to go to the hospital. There's a lot of benefits that are included in that travel accident policy. So definitely, when it comes to out of country medical, people think that their health insurance is going to cover them no matter where they are. That's not the case. Or if you need to be evacuated to bring you back to the States so you can get the care that you need. Again, just another thing that you can add to a business policy that would cover you personally. And it's really not that expensive.
Okay, great. I think that we got most everything. Is there anything that we left that we didn't discuss?
I would say just from an insurance perspective, there's not a lot of options out there. So one of the things that I would say as a business owner, a lot of people, especially this time of year, they start thinking they're just going to blast out their insurance applications to all the agents that are out there. Keep in mind that there's just not a lot of options that those agents are going to go to. So you may think that you're going to be shopping it well, but in reality, they're all going to the same exact places. So keep that in mind. If you guys are going to shop your insurance coverage, definitely get all of your applications completed. Make sure you have your loss runs. because getting those from your incumbent carrier, the person you're already with, it could potentially take a couple weeks. So make sure you get out ahead of that. One other thing that I would recommend, just as an insurance person, don't let your policies lapse. Don't let them, especially if it's for non-payment of premium, because that's definitely going to show up on your loss history, showing that there's a gap in coverage. Anytime that happens, an underwriter is going to want to know why that happened. And if they say, oh, it's because he just stopped paying his premium, after the summer was over, they may decide that they're not going to cover you. They may say, hey, look, this isn't the type of business owner that we want to cover. Or if they decide that that's what they're going to do, they'll make it what's called 100% fully earned. So as soon as you bind the policy, even if you cancel it halfway through the policy, they're going to keep 100% of that premium. So definitely something to keep in mind, especially if you guys do that often. Having continuous coverage, ideally for 3 to 5 years, that makes you look a lot better in the marketplace. Especially if you've been with the same carrier for, ideally 2 or 3 years at a time. But if you're jumping year after year, a lot of times that actually makes you look not so attractive as a risk, because they could potentially just be losing that account. And definitely one of those things to keep in mind, because your perception in the marketplace, like I said, there's not a lot of players out there. So if you piss one carrier off, there may be maybe 1 or 2 other options that you could go to. So you could be kind of handcuffing yourself in the marketplace as a risk. So keep that in mind. Another thing too is audits. We didn't really touch on audits, but even if you had a policy, let's just say you're with agent A and you decide to go to agent B, the following year because you got a better price, you still have to comply with the audit that you had with agent A. Even though if you don't have them anymore, that policy period that you did have the coverage, that's what the audit is going to be based on. So make sure you guys are complying with those, because again, there's not a lot of players in the space, and they all potentially could tell you if, hey, this was non-compliant on audits. So definitely want to make sure that you guys are keeping up with your appearances in the marketplace. A lot of people hate insurance, but you still need it. So don't shoot yourselves in the foot and scare away the only options that you have available.
All right, Alex, thank you so much for giving me the time this morning. And I think there's a lot of valuable information there. Have a wonderful day. Thanks, sir.
I appreciate it. Thank you.
Big and Bright Inflatables.